Hey folks, it's Simon here with your Tao Daily for Friday the 28th of February 2025. Happy Friday. Thursday saw the S&P and the Nasdaq chalk up their fifth decline in 6 days, and it was a day of pretty pronounced weakness. It was the second weakest day within the last 6 for the S&P. It was the weakest for the Nasdaq, and what we're seeing here with the S&Ps is a bit of change in market structure. All right, the price is below the 50-day moving average, and if you look at the session highs for the last 3 days, they have stalled right at that 50-day moving average. All right, so that's kind of bearish. The bottom of this box, which I've had drawn on the chart now for a while, coincides with the bottom of the election day gap. And as I've been saying since last Friday, a retest of the bottom of this box looks fairly likely for the S&Ps. Now, as we come across to the Nasdaq, let's take a quick look at the Qs here. They've already reached the bottom of the box. In fact, they've plunged below it. So it's decision time for the Qs. Do they find support here and make a rally back up to the middle of the box or potentially even the top of the box? Or is a trip back down to the 200-day moving average more likely? Friday's price action will be quite telling in that regard. NVIDIA remains in the box seat here. This is where the market really seems to be taking its lead from. NVIDIA had a very bearish day. We opened at its highs, closed on its lows. It closed above the high of the previous day's bar, closed below the low of that day's bar. That's a bearish key reversal, below the 200-day moving average. So that all looks pretty bearish. All right, so we're seeing a real popping in the AI sentiment balloon. If we look at a 5-minute chart, you can see here on NVIDIA, I mean, they kind of had pretty decent earnings and outlook. Opened on its dead highs for the session, first 5 minutes, whoom, flush down, a little bit of a mid-morning flush, a lot of sideways chop, and then it just got absolutely smashed in the last hour and a half of the day. And if you look at the Nasdaq, same pattern, gap up on the open, chop, flush. Look at the S&Ps, gap up at the open, chop, flush. That last hour and a half of the trading day was significantly different from what we saw throughout the rest of the trading session. The other thing that we're seeing is a lot of opens at the high and closes at the lows. All right, so that's got a bearish complexion to it as well. And the S&P has now gone nowhere for 4 months. It's four months of sideways chop. We've got PCE coming out before market on Friday. That's a figure that has always got the potential to move the market. Most of the inflation data that's been coming out recently hasn't been helpful. It's certainly been on the hot side. I don't think a slightly hotter PCE print is going to upset the market too much. I think that's probably in the price. If by some miracle we got a cool PCE print, that could lead to a little bit of stability here. Just quickly, the fact that the Nasdaq has found the bottom of the box and in fact penetrated it, it kind of gives the S&P permission to do the same. So the two critical levels to watch are the bottom of the box in the S&P, the bottom of the box in the Nasdaq, whether this holds, and then the 200-day moving average would be the next date for the Qs. That's what I got for you today. I hope it helps. I hope you have a great weekend, and I'll catch you next week.